Good day. Welcome to another Answers Weekly Wraps. I'm with Governor, and as what we'll do is we'll start off with a general market segment and then end up with a tech/AI segment. In our general market segment, we'll cover two main things. Firstly is German wage inflation, and then we'll be looking at US inflation. In our AI/tech segment, we look at the latest lawsuit against Google for monopolistic behavior, and then we look at Grok from from XAI, and then we will look at what's happening in China with regards to their reaction to the sanctions that have been placed on them for the last little while. Okay, so starting off with the German wage number. Why is this important? Look, Germany is the fourth largest or third largest economy in the world. It's slightly overtaken Japan in the last little while. It's an important economy in Europe. And, I also wanted to use this as an example of something to illustrate what's been happening in markets and what the dangers that we are experiencing going forward. So we have German wage inflation coming in above 5%, significantly above CPI numbers. According to the ECB, which is the central bank of Europe and therefore of Germany as well, because they use the euro, this is a catch-up effect. This is not a long-term trend, it's a catch-up effect. The problem I have with this particular way of looking at things is that in economics, we have a term for what happens when wages basically rise above inflation or rise significantly to try and catch up with inflation. This is called second-round effects. Second-round effects are like what happens after the first-round inflation. So you have inflation increasing because there's a drought and prices of food goes up. The second-round effect is that wages increase to actually compensate for the lack of buying power. That's the second-round effect. The problem with wages increasing is that wages don't tend to come down. So when the price of whatever commodity falls, after the drought is over, you will not find the price of wages falling. Okay, so let's just say the drought occurred, the price of corn doubled, and therefore people ask for like an 80% increase to compensate with that. If like the next year the corn price falls 50% and it's back to the way it was before, you will not see the price of wages falling. You'll not see labor prices falling, that 80% that they got before to make up for the fact that the price of corn is falling. So wages tend to act as a ratcheting system up. That's number one. Number two is that if wages or workers get into the habit of expecting certain levels of wage increase, like they expect 5% a year going forward, you tend not to find, irrespective of what inflation does, in terms of falling, that wages will fall, or the rate of increase will fall dramatically. So let's say there's been 10 years, every year, it's a 5% wage increase, okay? And then, suddenly you see the country goes in deflation, a substantial fall in inflation levels. You won't see wages dropping, to 1% increases immediately. No. Wages will maybe fall to 4% per year. Or the wage rate of increase will fall by 4% a year. Or maybe down to 3.5 or something, but it will not go down by 1% more a year. So wages don't just not go down because prices go down, but once you have an expectation built in terms of how much wages are going to increase every year, that level is going to be tough to break. Okay, so the fact that we have German inflation numbers coming in at excess of 5%, okay, it's the first one that we have such big numbers for, is dangerous. If we see a couple more of these things coming through, we will, number one, not be seeing a significant drop in that rate of increase very quickly. Number one. Number two, let's just say next year we go to deflation in the EU and we have wages, prices falling dramatically, inflation almost disappearing. You're not going to see the wage increases that we saw now go away. That's not going to happen. Next, looking at US inflation. US inflation came in slightly lower than last time on expectations, under 3%. I think that at the current given time, it's almost a guarantee that we have a rate cut in September. In fact, the market's pricing almost a one-third chance that we'll have a 0.5% rate cut in September. That's unlikely. 0.5% for the US is not something they normally do unless there's an emergency, and I don't think there's an emergency available at the moment. The fears around Japan from last week have largely disappeared. The market's recovered significantly from then. So I don't see 0.5% being likely, but I think 1%, 0.25% is pretty much guaranteed at the moment. Now, what is important about the inflation numbers from the US? Firstly, as expected, lower, unless we have some surprising, other numbers between now and the next rate decision, I think we pretty much are guaranteed to have that cut come through. The only question now is going to be, when is the next cut after that's going to be? And how quickly is the rate of decrease is going to occur. But I'm pretty confident stating right now that we have probably hit in the short to medium term a height in terms of, or a peak in terms of, interest rates in the US at least. Okay. Next, moving on to our tech segment. So starting off with Google. Google's been sued, or slash Alphabet's been sued for a monopolistic behavior on its search engine. So for those that don't know, one of the things that Google does is it basically tries to ensure that the search engine it has is everywhere. It even pays Apple like $20 billion plus a year to effectively make sure it's the default search engine on Apple. Yes, you can change things if you wanted to. You can go to other things. You can have other apps you want to install on your phone, DuckDuckGo or whatever it may be. But generally, people tend to stick with the one that's most easily available, and that's the default one. And for Google, that's worth paying $20 billion a year to Apple for all the privilege. Apple, of course, makes that entire thing as profit. I mean, it's being paid to do virtually nothing, to just say, tick box, this is going to be my default algo, default search engine. So when it comes to that kind of behavior, I think it's very clear that Google is trying to act monopolistically. And the problem with Google is that it's not just the search engine. It's the search engine, it's plus YouTube, it's plus its ad business. Its ad business especially, I think, is one of the big things that you don't realize leverages up things. There's a reason that people make so much money on YouTube. It's because the ad business that Google has, where it knows customers, it knows how to search words, etc., that allows it to significantly or monetize YouTube attention significantly better than almost anybody else. And so I do think when you're looking at what's been happening with regards to Google's behavior over the last, say, I would say, a couple decades plus, it's very easy to make an argument that it's acting as a monopoly. It has vast majority of search. It has the business that has access to advertisers, and it has the largest streaming platform in the world. Okay, so it's that combination together. Not only is each business have an argument for monopolistic behavior, like a search engine definitely does. The ad business probably does as well, and I'm not so sure about YouTube, but it's you could make an argument somewhere there. But if you combine all three together, I think the argument becomes even stronger because they can leverage the ad business to help YouTube. They can leverage the search business to help YouTube or to help the ad business. So it all works together in order to make Google this monopolistic entity. And if we do see a breakup of Google, I think it would be quite innovative, positive for the whole overall ecosystem in tech at the moment. Similar to what we saw, for instance, when Marvell, which was the monopoly telephone company, was broken up. Very soon thereafter, you started having things like wireless phones, and I think one of the reasons we had the internet take off as it did was because the monopoly was broken up. Okay. Next, moving on to Grok2. Grok2 is the latest version of Grok from XAI, which is Elon Musk's AI company. Now, looking at Grok2, it was started significantly after OpenAI, significantly after even things like Claude. It was a very, very late entrant into the industry. Musk raised $6 billion just a few months ago on a valuation of about $24 billion, okay, to really get XAI up and running. And XAI, I think, has done a spectacular job with Grok2. Now, there's some concerns which we'll talk about in a minute, but in terms of just pure evaluations of capabilities, it's currently ranking third on the best, LLMs out there. I think the latest version of GPT-4 is better than it. Gemini, the latest version of Gemini from Google is better than it, and that's about it. In fact, Grok2 is better than the May version of tools ChatGPT. So if it's basically, you can argue, May, June, July, August, you're talking about 3 months, basically. Grok2 is 3 months behind where OpenAI is at the moment. And even then, it's not that far behind where OpenAI is right now. In fact, they did these kind of arena tests where they test one thing against the other. And, Grok beats, ChatGPT 4.0 for Omni, the latest version, over 40% of the time. Obviously, 40% is still a losing rate, but it's still, not bad. So we're looking at Grok2 coming out, very, very powerful. Issues. Firstly, Musk has an advantage and a disadvantage in that he's more reckless than other, corporates, other CEOs. It's a positive because it allows you to move faster. It's a negative because it can cause issues. And one of the issues it's caused here, I think, is the fact that this system does anything you want it to do. You want literally images of Kamala Harris and President Trump kissing, that you can get that, of them being in the plane that's going to crash into the Twin Towers of 9/11. Done. People with guns, gore, anything you want to see. Not anything, quite frankly, but like quite high levels of violence or copyright infringement. I mean, people have been able to do things with Mickey Mouse and that kind of stuff much more easily than they're able to do such a thing with, for instance, any of the other LLMs out there. And that could, in the long term, be an issue because we've already seen that companies like Disney and so on have been very willing to actually go out and sue based on copyright infringement. And it's very clear that Nintendo, like Mario Brothers, Marvel, Disney, Star Wars, a whole bunch of stuff from Disney, a whole bunch of stuff from virtually every single IP, intellectual property out there in the entertainment industry. You can do that with this thing. The next thing is also you can do things with people. There's images of Musk kissing Trump, of, like I said, real people in images that most other places won't do. Okay, and depending on how the legal system adjusts to this, it could be a significant problem for Grok2 going forward. And now I want to talk to you about China. So for those that don't know, China is a huge country in Asia, communist. It is obviously the biggest economy in the world, on par with the US, the biggest or second biggest, but roughly the same. There's nobody close to the Chinese or the Americans. They're in a league of their own. And the Americans have tried to keep AI technology away from China. They've tried to ban the export of chips and chip-making equipment to China. And the reason for this was, I think it's pretty clear right now that most of the world is viewing AI as a paradigm-shifting technology that's going to change the way the world works. It's like, you invented guns. That's not a paradigm-shifting technology that changes how the world works. If you invent guns, you don't want everyone else, especially your rivals, to basically have guns as well. So if you were to basically ban the export of gun-making material and guns to your rival, that will give you an advantage going forward. And if AI is the new technology, kind of like guns, it's also going to give you an advantage going forward if you keep it out of the hands of your opponent. So what the US has done is it's sanctioned China, saying you can't get these high-end chips, you can't get the high-end machines. Now here's the danger with sanctions. Sanctions work very well if you sanction a small country because they can't do anything about it. They're just going to live without it. But you sanction a big enough country, the problem becomes that they have the capacity to replace those industries locally. And that's what China is doing. Remember, China has the world's largest manufacturing base, and manufacturing really is what we're going to be talking about here because the chips are about manufacturing, about making stuff. And to give an idea of just how powerful China's base is, when the Chinese, had issues with the first round of sanctions coming through, one of the things they did was we saw a lot of Chinese tech companies looking at things like, for instance, they looked at building electric vehicles. And many companies that had no history of building electric vehicles are now able to build electric vehicles just because they're able to tap into the Chinese manufacturing infrastructure. And they basically started up whole new car companies in the matter of a couple of years, which is even faster than Musk did. And this is the kind of stuff that China can do. And if you're going to be denying the Chinese access to the latest technology, number one, they'll try and steal it, but number two, they'll try and develop local sources. And they have the brain power, they have the size, and they have the system that will allow them to actually do this. They have trained engineers, trained computer scientists, so they have the brain power to do this thing. In fact, I would think that in terms of just pure trained brain power, there's no one in the world that compares to China. The next thing is they have the manufacturing base to build the stuff that they want, okay? And they're going to be able to do that with the brain power they have. They have the size to allow them to build the stuff that they need to build. And also they have the government will in there as well to do this. because the Chinese government understands this is important technology. And so the thing that we saw in the last week or so was that Huawei came out with a new AI chip, which seems not quite as good as what NVIDIA does, but it's not as far behind as you would thought it would be. And if they are able to do this in a period of a couple of years, I cannot guarantee to you in a few years' time that the Chinese chip manufacturing sector would not be, forget about competitive, but not be beating the Western chip manufacturing sector led by the US. So this is an important aspect of what's been happening with regards to the Chinese response to AI. They are building stuff. Their Kling video system is comparable to anything I've seen so far from the West. The AIs that they're using for China look to be really, really good. Obviously, I don't speak Chinese, and there's issues there, but they are really being able to progress at a rate that you'd be surprised by. And it kind of makes sense. You look, if Elon Musk was able to go out and build a whole big company that's ranking third in terms of LLMs, obviously he has access to chips that China doesn't. I don't think there's any reason to suspect that in a few years' time, China will not be consistently producing LLMs and other AI systems that are, if not better, at least as good as whatever is available in the West. Okay, thanks for joining me. I look forward to speaking to you guys in next week. Cheers.